In this presentation, we will continue on with part 3 of our example problem related to a not-for-profit hospital. In this section, we will be constructing the balance sheet from an adjusted trial balance. We're going to have our information, our trial balance on the left-hand side. The trial balance is in order with the assets in green, the liabilities in orange, what would be the equity section in a for-profit type organization, here being the net assets section in light blue. Then in the dark blue, we have what would be the income statement accounts, those temporary accounts, those accounts that measure timing that would then be closed out to what would be the equity section in a for-profit organization in the dark blue. We here, of course, concentrating on the assets, liability, and then the equity, which is often the most confusing kind of part, the net assets type of section. So we'll be spending a bit more time there as we get to that piece. Note, of course, that we have the trial balance in order, or that is formatted within debits and credits, while the double entry accounting system will be used in the format of the accounting equation to see that it is in function within the balance sheet, as we could see the balance sheet being in balance. So we will be converting, therefore, from a debit and credit system to a plus and minus system. So we're going to have our balance sheet. We're going to start off. We're just going to be moving from top to bottom. We're going to be starting off with, of course, the assets, first part of the balance sheet. We will be breaking out between current assets and long-term assets with our not-for-profit hospital. Breaking out the current assets, we're just going to go straight down the line. We're going to pull over the cash. Notice we're pulling them over into the inner column and an outer column, not because it's a debit or a credit, but because we're going to have a subcategory of the current assets and bring them into the inner column, then sum them up in the outer column. Then we're going to have the accounts receivable that is recorded net. What that means, of course, is that we have the accounts receivable at the 59350 minus the allowance for uncollectible accounts 16700. That giving us the net amount of receivables, 42,650. Next, we have the inventory at the 90,200. Then we have the total current assets. Total current assets, note that is in the outer column. We're summing these up in the outer column. That, of course, is the 387,500 plus the 42650 plus the 90200 for the 520,350. We've now found a home for all of these items down to inventory. Next, we have the assets that are limited to use. We're going to have a subcategory to mark out to the users, hey, these are the assets that are limited to use. That includes the cash. Notice in our trial balance, we have cash and then labeling it limited to use here within the name because we don't have this ability to have the subcategory. Here, we are within the subcategory, and therefore this cash amount in that subcategory is limited to use. That's the 26,390. Then we have the interest income, also limited to use. Picking that item up, and then we have the investments that are going to be limited to use. That being the 233.39, adding those up being the 26,390, the 1,630, and the 233.39 gives us the total of the total assets limited to use, 261.59. Next, we're going to go to the property, plant, and equipment, still in the assets section. Property, plant, and equipment, including the land, which is not depreciable. Then we have the building, and we're just going to simply record it net. What that means, of course, is if that we look at the building here, we've got the building that is 4521400 minus the accumulated depreciation, 1746400. That gives us the net value, 2,775,000. Then we have the equipment, same kind of concept, where we will be taking the 2886000 minus the 1159400, giving the net value of 1,726,600. Then we're going to have the total property, plants, and equipment, just simply summing up these three numbers to give us the total property, plants, and equipment of the 4,716,200. Then we're going to go to the total assets. Total assets will be summing up the outer column. The three categories, we're in the outer column now, so that includes the 520,350, the 261,059, and the 471,6200 for the 5,497,609. Then we're going to move on to the second component, which is going to be the liabilities and net assets, similar to liabilities and equity. The sum of this second component should be adding up to the same 5,497,609. We will then have the current liabilities. We're going to be going through the orange account now. Notice that the orange accounts over here, such as accounts payable have credit balances represented by brackets. On this side, we're going to remove the brackets, put them into the inner column, not because it represents debits and credits, but because it's a subcategory. No debits and credits on the balance sheet. Plus and minus system accounting equation. Accrual payroll, same kind of concept. We're bringing that over. And then we're going to be bringing over the current portion of the mortgage payable. So the current portion of the long-term liability. If we add them up then, summing them up, just these three numbers adds up to that $847,590. Then we're going to have the long-term debt for the payable. We're just going to break that out just in one line. We're not going to have a subcategory saying long-term liabilities when there's only one of them. We're just simply going to put the long-term debt there, put it into the outer column because there is no subcategorization. And then we're going to have the total liabilities, which is just going to be the sum of the 847,590 and the 204,500, given the 2,892,590. Next, we're on the net assets section, similar to the equity section. This is one of the kind of most confusing sections because we have to deal with the added. Well, first we have to deal with the same thing we have to deal with a for-profit type of organization, and that is, this is like the equity section, and nothing has been closed out to it yet. So the ending equity section is actually equity after everything is closed out to it. Then we have the added problem here of the equity section has these different subcategories, that being the without donor restrictions, the without donor restrictions, second classification, undesignated and designated, and then with donor restrictions. So we have to deal with that problem as well. To do that, we've done that on the closing process, but first I just want to point out that if this is all you have, the adjusted trial balance, you can first get to this number, and that's what I would do. I would get to this number first, which is the total, which will just be the total of all these numbers. And if you do that, then you found the total of everything, and everything is in balance if your double entry accounting system is in balance. In other words, if you get to this number, then you can add up the liabilities and the net assets, the liabilities being the 2892590 and the net assets 26050. That should be a 019, should add up to the 5497609, which equals the total assets. Then you know you're in balance. Then you have the smaller problem of this number then being all of these combined that you then could break out into this subcategorization. That's an easier way to do it to me. If you can take the bigger problem, break it down to a smaller problem, you can do that in that format. Now to do that, if you were in Excel, all you'd have to do is sum up these numbers. Credits minus the debits would give you the balance, would give you this 62605. If you don't have that, you'd have to pull out the trusty calculator and do it, but you're going to have to do that anyways if you're doing it by paper in some way. So the way you would do that, I'm going to do this with a calculator. If this is too tedious, then that's okay. Then you can fast forward it, but I'm going to take the credits minus the debits for all the blue accounts here. So let's do that real quick. Credits minus the debits, 2087260 plus the 250860 plus the 176240 plus the 3502800 plus the 1003550 plus the 9980 minus 1528000 minus 5048880 minus the 71881 minus the 1296025 minus 377275 minus the 681. And then you don't have to do these last two because they're going to cancel each other out, but I'll do them anyways. Plus the 97500 minus the 97500 hopefully gives us the 2,605,19. I wasn't worried at all that would work. Anyway, so we have that. So it's not too tedious to do that, and then you can get to this number even if you have a fairly long trial balance. Then you can verify that you are in balance. And then you can go back to these numbers and say, okay, now I need to break this out, this 2,605,19 into these three numbers. Smaller problem. I know that this number works. I know that we are in balance. How can I then break that out into these numbers? We did that with the closing process entry. So when we did the closing process, we closed all temporary accounts to the proper net asset account and then reallocated as was needed in order to get our breakout between these three numbers. So in our problem, we did that in the closing entry, these three numbers then allocating out to the net assets with donor restrictions, undesignated, net assets with donor restriction, net assets without donor restrictions, undesignated, without donor restrictions designated, and then with donor restrictions of the 78,740. These three numbers then now, of course, add up to that same 2,605,19, just as these add up to the same number. The debits minus the credits here, or assets minus liabilities, also equaling the 2,605,19, just as they do on our balance sheet if we were to consider the assets 549,609. And now what happened there? I gotta cut my nails. We then have the 549,609. That's going to be the total assets minus the liabilities of the 2,892,590, and that's going to give us the 2,605,19.